All right, welcome back for the episode of Carnivore Trade. Today is Wednesday, August 9th, 2023. If you're not done so already, please give a video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, let's get into it today. So, markets here are trading lower here. I'm having a little bit of a puke. Really, in the last 15 minutes, markets are open for another 3 minutes here. But really, even the last hour, we've kind of sold off a little bit. So a lot of whipsaw, a lot of choppiness here today. And it was very similar to yesterday where we kind of sold off in the morning. And then late morning around lunchtime, light volume kicks in, buy the dippers kick in, and seeing a little bit of short covering. And we see the same thing kind of today. This looks just like short covering here. Why? Because we didn't build any support on the way up. It's just kind of a V shape there. And now we're starting to dip here. Did they leak the CPI? It's certainly possible, seeing some chatter about that already. But either way, the market right now is going to be looking at that report. And it does look like right now consensus is 3.3%. That is ironic. And you're going to get a big, I'm going to try and not give you too much of a sermon here, but I've been talking about this inflation bottoming here for a while, and it looks like it has. So even if it comes in at 3.1, which would be equal to last month, you're looking at sticky inflation, right? So that's something we've been talking about here for a while. The last three prints, I think it went from 6 to 5, then 5 to 4, then 4 to 3. So if it goes up, that kind of pokes a hole in the whole narrative here that the Fed's killed inflation. Again, I've mentioned this thousands of times here in the last couple of weeks to months that is going to be the case. We look at crude here continuing to rally. Again, above our weekly resistance level. We get a close above 83.53 on the week. This is going to squeeze up. Natural gas here up about 17% in the last week alone, and it's up over 40% from the lows here. So again, energy starting to move up, and that is putting pressure on the market. Market's starting to realize here that it's not an easy game. It's easy to go from 9 or 10 to 3%, but it's a lot harder to go from 3 to 0 or 3 to 2 even. Speaking of 12, that's where I get that number, because if you add up June CPI to this year, it's actually 12%. Really in the last 2 years, so that's quite a bit here, and the market's acting like like inflation's coming down. It's not, and we're starting to come to that realization. But anyways, as far as tomorrow, I don't care what we're doing right here. This could easily just be hedging, right? But what's important is that right now we're looking at 444 in the spiders. We did already kind of come down and get really close to it today and yesterday. So I would think if we do sell a little bit tomorrow, we can go down to this 50 moving average and maybe this 440 area. That right now is kind of the max downside I see right now. That's really it. I know that now I think there's going to be a lot more, but right now that's really all I see. If we do rally up, we'll watch that 20 moving average. Again, that fake print from yesterday, 450.70 is still there. And then again, we have the 20 moving average in the gap window. That should be resistance there on the upside. So we'll watch this market here. And obviously, all eyes will be on the CPI tomorrow. As far as the Qs are concerned, we did get to this trend line today, and actually we closed below it a little bit. Yeah, with that little dip there in the end of the day. Yesterday, I said, we're going to count this as a hit. Well, if there was any doubt, it's definitely hit today. We obviously just closed below the 50 moving average here. In fact, yeah, that's the first time. Take a look at that. And it's funny how that works, right? First time we've closed below the 50 moving average since the BTFP program, and since the regional bank collapse on the Qs. So you got to go all the way back to the March lows. First close below the 50 MA on the QQQ. So we have, I'm counting this, I'm just going to look at a weekly here, and I'm going to count this as 1, 2, 3 hits there. So on that trend line, I don't count that middle there. That's a cluster to me. So I would say third hit, we can get a rally off of that. Even if we do trade down a bit, there's still a fair amount of support here around 360. There's a pivot right here, 363. 360, and then you've got right here about 358. So there's good daily chart support here on the Qs in this area. And the same thing with the spiders, like I just mentioned, the 50 MA and then this trend line. So even if we do dump down tomorrow, you'll see some short covering if we get a gap down. And that's why I was kind of looking for earlier this week. I was hoping we'd get a gap down Monday, or excuse me, a sell Monday and then a gap down Tuesday into this area. Then you get kind of a V shape off of that. But that did not, that has not been the case. We've gone more sideways to low, sideways to lower, to down rather. And, if we get down into this area, tomorrow or Friday, I think that gets bought. You'll see some shorts take profits there. But right now, and if we go, if we do gap up, I don't think it's healthy. You shouldn't end on a gap up. It should end on a gap down. And we've seen distribution volume. So I think for the bulls, you actually want a flush here into this area. And that's an area that I would be potentially interested in, maybe buying a dip. But either way, and the narrative still stands here. Inflation's not going anywhere. Yields have been telling us that. There's a whole plethora of reasons that I give out here pretty much every day as to why that's not going to be the case. I won't, force you to listen to that again. But either way, it's funny, right? So this whole rally is predicated on the fact that inflation's going back to 2%, and it's right now the consensus is that it's at 3.3. And we're still up here at 450, 445. So we'll see how this market plays out moving forward. But those are the levels that we're watching here in the near term. And then obviously there's the Qs. 380 will still be resistance on the upside, maybe even 378. But that's kind of your big level there if we were to pop. Russell 2000 here today, that was lower as well, although not down nearly as much. Still inside of yesterday's candle, but it was red. And again, yesterday, I don't like how you closed below this green bar. Not a good sign. You're still holding onto these pivots. If you lose that, this is in trouble here, especially on the weekly. You don't want a weekly close below 191.14. That would be a big negative. For the Russell, we'll probably have to go down back to that 184, 185 handle there. But for right now, it's hanging in there okay. And still above the 50 moving average, which is more than the triple Qs can say. Dow here via the DIA just closed, barely below that 20 moving average. So again, it's not like this is major chart damage, but it is kind of a start. You have to start somewhere if you're going to pull back. And that's the first thing that always gets taken out. Levels here on the downside, we'll look at 345 and then 343 there for the DIA if we do push lower. Back above 355 is a good point of control. And then obviously the little high there around 356.70. And then after that, if you continue higher, your gap fill at 359.14. So those are the levels there to watch on the DIA, but again, charts showing a little bit of weakness here. Again, on the downside, 345 there. All right, semiconductors under a little bit of pressure here today, down 2%. Why is that? NVIDIA was down 4.72, and that basically is the SMH at this point. Why was NVIDIA down? Super microcomputer reporting down 25, just under 25% on the day. This has been basically a meme stock at this point, but it is an AI stock. And oh my God, their earnings weren't even that good. How can you believe that? They have AI though. They have AI chips. But apparently there wasn't nearly as much demand for the AI chips as originally the market priced in. Imagine that. They're not going to be able to make tens of billions of dollars overnight on these AI chips. It's going to take years. And the market's kind of coming to that realization here, or maybe the algos are coming to that realization after bidding this thing up 1,000% in the last 7 or 8 months. But either way, super microcomputer taking high, and the AI stocks took a hit across the board in sympathy. There's AI itself down 8.67, Palantir big whack down 10.5. That sliced a lot of gains here. Big outside candle there on the weekly. So these AI stocks taking a hit. Even Microsoft, kind of an AI stock at this point as well. That's been under pressure here. That should have support around 310 though. But again, the AI mania. We've been talking about this since that pop on Microsoft. So there's starting to be AI fatigue. It couldn't hold the gains. Apple tried to do the same playbook. Couldn't hold the gains. So starting to come in. By the way, Apple, I don't think this is bottomed yet. We gapped up yesterday. We gapped up today. I'd be interested in this thing if we gap down for a bounce, especially if we get down to 175. I think there's some decent support there with this pivot and kind of this little area right here on the weekly. You got these pivots in there as well. But this needs to gap down. When it gaps down, then it can bottom here and you can get a rally, maybe even back to 185 there. But yeah, again, AI craze starting to hit the semiconductors there. We lose 150, then it's down to, about 145 or so, and then again down to this trend line, which I think it does get down to anyway. But anyways, IGV here, lower, took out yesterday's low. So this one I thought had a good chance of bouncing the last 2 days, and it didn't really do that. It's got to hold this weekly level here. Do not want a close below 338.87. I'm going to put that in because that's important. So let's get that exact. There we go. You close the week below that. It's down to 320. So in this trend line here. So be careful with IGV. Needs to get a bid tomorrow and into Friday. Dow Transport's here, finally doing a little bit of damage there. We closed below this green bar. So that is a minor breakdown. It's still very high on the hog. It's not like, we're not going to like call it dead just yet, but that's a weak sign. 16,000, you have a little bit of daily chart support, and then really kind of down to 15.5, 15.6 as I've let you know there. If we do rally back up, you'll still have to get through this high here, but that is a big negative closing below that inside bar low on the transports there. All right, interest rates here. Let's go over to the 2-year first, as always. So 2-year here up about 4.5 basis points there, up to 4.8. Again, yields just in a big holding pattern here. This is a power pattern here, and I do expect them to break out higher. It doesn't mean that happens right away, but eventually they will. They have higher floors in them. 10-year, that was red, so yield curve not really, again, we talked about this recently. It looked like the yield curve was going to start to normalize and right back down there on the 2s and 10s and 3-month 10-year. But you see the 10-year still in a holding pattern at 4%, 30-year down fractionally, still at 4.16. If that gets through the highs, it's going to be very interesting here, which eventually it will. But again, yields just doing some backing and filling, but those patterns look really good. Anyways, let's get over here to housing. XHB tried to buy the dip today. It doesn't look like much of a candle there, but intraday, tried to get a buy the dip, and then that sold off too. So again, I talked about this yesterday, possible kind of like rolling tops type look there on XHB. Same thing with ITB, kind of a rolling top type look. Doesn't mean it's topped. This is still one of the strongest sectors in the entire market. It's still holding these moving averages here, but it does look really gassed. You take these levels out, that's kind of your first step. Then around 82.50, you'll have some good daily chart support for XHB. You got to take out this pivot, then you can get down to 80.50. But again, they're still holding up really well. It does look like a rounded top. It does look very tired though, but no major sell signal just yet. VNQ, so REITs here, not a great look here on the daily. You're inside of this tail, which is a positive, but now you're starting to put in possible bear flag. So I'm thinking probably down to 80.50, maybe $80. There's a trend line right here, and then there's one right around 78. Obviously, they're both up sloping. So if we do push down, that's where we're going to go. On the upside, there's your trend line resistance right there. So pretty easy chart to look at, pretty simple there. But VNQ, again, remember last week, I don't like that close that we got for real estate, but it was flat today. XLF here, down 26 cents. That can still get to 36.25. That's not changed right now. Obviously, if the market dumps out tomorrow, that's probably not going to happen, at least not right away. But in the near term, maybe you go down to retest this 50 moving average and 200 moving average. There would be good daily chart support around 32.25, somewhere in that range. 34 to 34.25 for the daily chart on XLF. So if it does push down, that's where we'll look. Again, 36.20 is still resistance on the upside. KRE is still strong. Again, this can still go higher, believe it or not. I don't see any issues with that chart just yet. If we do push down, we'll probably just look to this area here, right around 45. That's going to be good support there on the KRE for now. KBE, same thing, holding up well, right down to 38 or so would be support, but I don't see any issues on this. Ironically, banks, regional banks specifically, holding up okay. Broker dealers on the weaker side, again, very overbought. Does have some daily support around 490. Again, still very extended, and it is pulling back now. Crude, we already talked about, up 1.6% on the day. If you close above this pivot here on the weekly, it's going to squeeze up to the low 90s. If not, then it's probably just going to have to put in a higher low, and then it's going to squeeze up to the low 90s. That's my take on crude right now. I think the bottom is in, and it looks very strong here right now. XLE continuing higher here. This is up in a down tape. Again, energy is very strong and very bullish energy moving forward. Up another 1.25. Did come off the highs. But again, the market is trading down right now because energy is higher. So there's kind of that dynamic there where even if the market goes down, energy can still get a bid because, again, the reason the market's going down is because energy is up. So this is one sector that can and will outperform most likely, although, somewhat overbought. Look at the XOP. look at this resistance, right? It's just right through that. Now, maybe, who knows? Maybe we puke down tomorrow. CPI, we're into this weekly red bar, so let's put that in there. Actually, 150.32. So I'm gonna put that in. This is a little extended, and it's through both of those trend lines, showing a lot of strength here. A little doji there, so that may need to do some backing and filling. But again, energy really strong. OIH new highs. That's acting really well. Nat gas up 16% in the last week, testing $3. Channel, right? So let's go here again. I've been showing you this every day. Channel, bull flag, up move. You get through 3, that's the big squeeze level. Might have to do a little bit of backing off here. It's big volume there, by the way. Might have a little bit of backing and filling to do at 3, but you get through that, it's up to 350 and then 4. So nat gas finally starting to turn the corner here after that big bull base there, and there's room for higher lows now as well. All right, dollar index. All right, so where's our dollar chart? There we go. Dollar chart just down 4 pennies again into Friday. 102.56. Nothing's changed. You have a bullish inside bar on the daily. Weekly, you're still inside of this red candle. So weekly pattern's more dominant until proven otherwise. If we prove it otherwise, then we'll start to look for 103, 103.50 on the DXY, but it's holding up right now. Who knows? Maybe tomorrow it's priced in and we sell down. Maybe the shorts cover in the market and dollar longs take profits. I don't know. But right now we're watching that level there on a weekly close. Daily chart is bullish for now. Gold here did back off a little bit today, and that's even with the 30-year yield coming in a little bit. So gold a little bit showing a little bit of weakness here. Down 58 basis points. I think it wants to go down to 1900 again. You get through 1900, it's down to 1850 to 1830. But again, backing off there. Silver still on the weaker side, down 34 basis points. It'll have some daily chart support right in this area. It's kind of this chop zone where it was going to break down and then it reversed. So should have some support there. Again, it's oversold. Again, maybe CPI is a catalyst for these things to kind of get a bounce here. But I think it's got to go lower. But in any case, it's hanging in there for now at least, but definitely a weak sign that we broke through that area. Platinum also on the weaker side, lower low there. That's getting attractive, almost there, getting close. And then palladium here, hanging on to that 1200 handle. I still think that has to go down and pierce 1100. Copper inside A, let's not make a lot out of that. It still has support at 370, but if that breaks, it's down to here and then down to 370. Bitcoin, not a whole lot going on. Again, as you'd can imagine, it's been very quiet here, just hanging around that 30,000 handle. We did get above our resistance level yesterday, but it's like every time this does something, the next day it does the opposite. Although, to be fair, it's only retracing a little bit of that move from yesterday so far. Again, on the weekly, this is still really strong here. I don't really see any problems with it. So that is a power pattern there on the weekly, and that may still have a chance to push up here. Bitcoin's also getting a bid right now because a lot of these credit downgrades are making people kind of nervous about their money, where they're going to put their money, and that was the reason why it bid up in March too. So if more of that comes out, you might get more of a bid in Bitcoin, but I think it's still holding up just fine. I like that weekly pattern a lot. Anyways, so get back to the spiders here to wrap up. Again, even if we dump tomorrow, this is probably your max downside for the near term. So right into this area here, and then we can get a bounce off of that. If we do rally up, I just don't see it as being very bullish. I think you need to get a flush out. You need to get a gap down to really kind of cement a low and put in a V shape. And for the upside, again, 452, 453, that's kind of what I'm looking at right now. But again, we'll see how the market trades. Again, it's all about the CPI reaction. It's not about the number. But again, big picture, inflation's starting to bottom here, and energy and yields are certainly telling us that and have been telling us that for a while. So anyways, guys, going to wrap up here. You guys take care. Come find me on carnivoretrades.com. I will talk to you guys all tomorrow.